Like, most people don't think their number goes down when they're holding dollars, but once you understand the inflation rate, you realize your purchasing power is going down if you're not keeping up with the cost of capital. And so your wealth is being destroyed. There are a lot of ways to view Bitcoin, right? You can view Bitcoin as digital property, digital money, or digital energy, and if you characterize it as digital property, it's like I bought a $500 billion block of property in cyberspace. And if you characterize it as digital money, I basically bought $500 million worth of a currency that nobody can print any more of. And if you characterize this digital energy, what we did is took analog energy and we digitized it. And, if you had a megawatt of power and you sold that megawatt of power commercially at 11 cents a kilowatt hour, you'd have about $1 million worth of revenue. And if you took that megawatt of power and you mine Bitcoin with an S19 miner, today you'd have about $4 million of Bitcoin. But the difference is, if I'm holding a megawatt of power as electrical energy, electricity, I'm going to lose 2%. How do you put it in a battery? Find me a battery that holds a megawatt of power. First of all, if you found one, it's got a 2% bleed rate a month or more. So you're going to lose 24% of your power in a year. The half-life of the power is at best 3 years. And if you move it, you have to move it on a power line. You can't move it more than 500 miles. You lose 6% of your energy at the end of the line every time you move it. So your transaction fee is high if you move it, and your inflation rate is high if you hold it. And on the other hand, if you convert it to digital energy, you could hold it on the network forever for no power loss. Someone just moved $2 billion of Bitcoin at 78 cents, right? You guys saw that? So you could move it from here to Tokyo across a satellite connection for 78 cents. So again, no cost to move it, no cost to hold it, no constraints on the storing of it. The half-life is forever. So when I look at Bitcoin, I think, let's just convert the balance sheet from analog money to digital money, or from something that's a depreciating asset to an appreciating asset. We did that, and we took the first bite at the apple August of last year, and then we did a Dutch auction to get permission, in essence, from our shareholders to reinvest the rest. And by the time we finished that, we had, in essence, we had bought back about $70 million worth of stock, 60 or 70, I forget. And we had invested $425 million in Bitcoin. Obviously, Bitcoin did what it's supposed to do, which is appreciated. And from that point, our stock started appreciating, Bitcoin started appreciating, and we had the ability to raise more money through business operations. We generated cash flow. We sold equity. We sold debt. We sold convertible debt. And we continue to build to our Bitcoin position because what we realized is we can and we should have two strategies. One strategy is run the software business, and the other strategy is run a property business. We're in essence running a cyber development company, or a cyber REIT, if you want. Like, if I told you there's 21 million blocks in cyberspace and each one's a Bitcoin, and the world's going to consist of 21 million blocks, and you showed up there 200 years before everybody else showed up, you would think, I'm just going to start buying city blocks in cyberspace as fast as I can. So we bought ourselves some, and then we realized that there are more to be bought. And so we kept buying. So where do we end up with today? Or where are we today? Let's contrast this. A year ago, we were a $500 million business growing 0% a year with $500 million in a balance sheet and crumbling cash and credit. That's where we were a year ago. And the company was valued at about $1 billion. Maybe 1 times revenue for the enterprise software business, and then the cash and credit was worth 1. That's where we were a year ago. Today, we're a $500 million software business growing about 10% a year. So we got some growth out of it. We got more notoriety, better for employee morale, better for product awareness. So we got a bit of a boost. And we're a $5 billion property business, Bitcoin business, growing 100% a year or more. So we've got a high growth business, digital energy or digital property, and we've got a low growth business, enterprise software, and they're both linked and they both benefit from each other in different ways. So why did we do it? Well, first we did it defensively, and then we were opportunistic, right? Stage 1 is defensive. I don't want to lose my money. Stage 2 is opportunistic. I did it because I could. Stage 3 is strategic. This is a pretty good idea to buy up all of Cyber Manhattan before everybody else moves here. And if Bitcoin is appreciating 100% a year, and if I can borrow money at 5% or 1% or 6%, then my arbitrage is going to be 100%, 95%, whatever the number is, right? We can debate. I think Bitcoin went up 130% on average for a decade, and it's up faster this year. So you plug in the number you think it'll be, but let's say we think it's going to go up 110% for the near future. If I can borrow money at 5%, then I'm going to get 105% arbitrage. Why wouldn't you? Like, most people don't think their number goes down when they're holding dollars, but once you understand the inflation rate, you realize your purchasing power is going down if you're not keeping up with the cost of capital. And so your wealth is being destroyed. So first, I just wanted the number not to go down. I wanted to preserve wealth. And then we realized that it was a high quality property. I think the epiphany comes when you realize that it's the dominant digital property network, and digital property is better than physical property in every way conceivable. So if I theoretically designed digital property, I want to store $1 billion. I want to hold it in the palm of my hand, move it at the speed of light, vibrate it 1 million times a second. I want it to last forever. I want immortal, indestructible, infinite, all-powerful, programmable energy, right? Matter is energy. Energy is matter. I can convert energy. I could take $1 billion and turn it into a building. I could, in theory, turn a building back into $1 billion. I can buy $1 billion worth of electricity. I could buy $1 billion worth of guns, whatever it is you want to do, right? That, money is ultimately monetary energy, and you can convert it into any kind of product or service or property. It's the apex. Once you realize that Bitcoin is digital property or digital money or digital energy, all of these things, then it becomes clear that everything else you could possibly own is inferior to that, right? You would really never want to own anything other than pure digital energy, right? Like, why do you want to own a building, right? The only reason you want to own a building is you were going to freeze to death if you didn't have somebody to come in from the cold too, right? Like, you would own a building to live in because otherwise you're going to freeze to death. Okay, that's a good reason. But with all your discretionary energy beyond that, if you chose to own a 50-story skyscraper in Manhattan, is that as good as digital? No, because the mayor of Manhattan can seize your building by eminent domain. If you're thinking you're going to rent the building out, the politician can tell you that you're not allowed to evict any of your tenants, even though they don't pay you, right? So the property in the physical realm can be impaired by any political jurisdiction, anyone with jurisdiction over the property. And that means the neighborhood review board, right? The neighborhood building committee can tell you you can't put an awning in front of your building. The mayor, the governor, every regulator, OSHA, environmental review boards, the Congress, the Senate, the White House. Everybody in that physical domain can impair the value of your property. So not only that, it's going to be impaired. The second is it's going to be taxed, right? Because when they decide to tax your building, you can't move your building.